Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.
The President of the United States, Donald Trump, on a phone call with the Russian President Vladimir Putin as the President makes a push for a 30-day ceasefire. To build on the developments of the last 24 hours, I'm pleased to say we're joined now by Steve Witkoff, the White House Special Envoy to the Middle East. Steve, welcome to the program, sir. Fantastic to get some time with you. I know how much time you put in with the Russian President to make this call happen. It's not the first time you've spoken to him. It's not the first time the President of the United States has spoken to the Russian leader either. Could you set the stage for us, sir? How different was this call?
I thought the call was epic. Jonathan, I thought it was epic, transformational. Those are the sorts of adjectives that I use about this call. The president and President Trump and President Putin were in sync with one another. The call was outcome-oriented. They were talking about how to save lives, how to stop the carnage, and for me, I was proud to be an American sitting there listening to it.
Steve, let's talk about some of the outcomes. We're hopeful that ultimately we end up with a 30-day ceasefire. Before we get there, we're working towards things like a prisoner swap. We're working towards a maritime ceasefire in the Black Sea. That's important too. There was also a conversation yesterday about maybe an agreement to limit attacks on energy infrastructure. And we'd love to build on that, because earlier on this morning, we heard from the Ukrainian leader who said that overnight, Russia sent 150 drones and hit Ukrainian energy. I just wonder what was actually agreed and whether Russia crossed the line overnight.
Well, what was agreed between the two presidents was, and it was at President Trump's suggestion, that there be a cessation of attacks on energy infrastructure from both sides and civilian infrastructure for that matter. Also, working towards a Black Sea moratorium on hits on naval vessels and freighters carrying grain and things of that sort. And ultimately, that would evolve into a full-on ceasefire, which is a bit more complicated because there's a 2,000-kilometer border, there's Kursk, and there's a lot of details that go into that. But with regard to your question on some of the reporting with regard to the Russian drones last night, I have it on good information from a telephone call I had before I went on this show that President Putin issued an order within 10 minutes of his call with the president directing Russian forces not to be attacking any Ukrainian energy infrastructure. And any attacks that happened last night would have happened before that order was given. In fact, the Russians tell me this morning that 7 of their drones were on their way when President Putin issued his order, and they were shot down by Russian forces. So I tend to believe that President Putin is operating in good faith. He said that he was going to be operating in good faith to the president yesterday, and I take him at his word.
So, Mr. Witkoff, is your understanding that as of today, energy facilities, energy infrastructure will be off limits?
That's my understanding, yes, ma'am.
Do you think the next stage potentially, as we get the roadmap towards a 30-day full ceasefire, potentially geography should be off limits, like drones hitting Kyiv?
You know, I can't speak to that. I think the idea behind a 30-day ceasefire, first of all, we made more progress yesterday than has been made in the last 3.5 years. The two leaders actually talked and committed to cessation of attacks on energy infrastructure and civilian infrastructure. They talked about reviving the Black Sea maritime agreement that had been negotiated several years ago and never really implemented. Those are monumental things, and they're trust-building things as well. And I think beyond that, they also went into how you would put the finishing touches on a full-on ceasefire. That full-on ceasefire has a lot to do with this 2,000-kilometer line that where the Ukrainians are lined up against the Russians. It's complicated. There are different battlefield conditions in various spots. That's for the technical teams to figure it out. And they're going to be meeting in Saudi Arabia, I believe, beginning Monday and Tuesday. So lots of progress happened yesterday, and it happened in large part because of President Trump.
Let's talk about that meeting in Saudi Arabia in the next week or so. The team's going to be led by, I believe, Secretary Rubio. I think we all want to know what needs to happen at that meeting before the two leaders end up in the same room to get to that end deal that we all want to see. What needs to happen in the next week?
Well, I'm not sure that the Secretary of State has done an amazing job, as has the National Security Advisor, Mike Waltz. They were both at the last meeting in Jeddah. It went well. Lots of trust building happened. And I believe on Monday we actually have the technical teams going. And why? Because that's what we're down to. We don't need to have the larger overarching discussions. That's been had, and it was completed yesterday between the two leaders. They agreed on a pathway to some ceasefire conditions today and to a full-on ceasefire that will be negotiated over the coming days. I actually think in a couple of weeks we're going to get to it. So lots of good things. Now it's for the technical teams to dot the I's and cross the T's, and everybody is committed to that process.
If you think we're going to get there in a couple of weeks, could we then see a meeting in person between President Trump and President Putin in the kingdom?
You know, I can't speak for them, but my best bet would be that it's likely to happen. They have a great rapport together. They had a great rapport in the first Trump administration. It was on display yesterday. This was really a very positive, very proactive, outcome-oriented call, and that's who President Trump is. He's there to get to the goal line, and we went a long way yesterday to doing that.
You've known the president a long, long time, going back decades. In fact, there's very few people that know him better than you do. There's a lot of people speculating about what the motives are, what the end objectives are. If we could just sit on that for a moment. Does the push for peace in Ukraine run parallel with a push to normalize US-Russia relations? Or, Steve, are they separate issues?
No, I don't think there's any doubt that the two are important. Russia is a critical relationship for us. It's critical as it affects all other things out there: China, Iran, the Middle East. These two leaders coming together and having conversations about nuclear proliferation, which they did yesterday and was enormously positive. This is enormously beneficial for the world at large, and the president believes in this. He believes in peace. He believes in engaging. He believes in using peace through strength to create a better world for everybody. And with that could come a drop in defense budgets. Take all that money and spend it on things that matter more than waging war all the time. This is his policy, and so he's to be commended for that. Yesterday was literally transformational as far as I am concerned.
Mr. Witkoff, so then is the idea of its normalization to draw a wedge between Russia and China and Russia and Iran as well, to further isolate America's adversaries like Tehran and Beijing?
I think normalization is about having real conversation. President Biden, according to President Putin, did not speak to President Putin for 3.5 years. That's not a proper way to run policy. President Trump, in a short 8 weeks, has spoken to President Putin twice. Very, very positive and constructive conversations. He's directed me on his behalf to go to Moscow. I've had close to 8 hours of conversations with President Putin and met with other key people on his team. And he's directed the National Security Advisor, the Secretary of State, the CIA Director, Pete Hegseth, our Secretary of Defense. Everybody is engaged in this process. And it's really wonderful to see. I think the people ought to be uplifted, and I think you're going to see some very, very positive results in the near term.
In the lengthy conversations you have had with the Russian leader, did restrictions on Russian energy come up at all? Did they come up yesterday?
When you say restrictions, Jonathan, on Russian energy, what do you, I'm not sure what you're asking.
Restrictions on financial services, engaging in deals that restrict the flow of Russian energy, the price cap that the Biden administration pushed over the last year or so, sir, a variety of restrictions that make it difficult for Russian energy to compete with energy elsewhere.
We did not discuss, or pardon me, the president did not discuss specifically sanctions yesterday, if that's what you're referring to. I think obviously that's a conversation that the two leaders are going to have, and everybody's open to it. But first and foremost, we want a solution that means an end to the fighting. We want to get to the ceasefire. That's the president's policy, and we're going to get to the ceasefire. And I think after that, everything else will be a detail. Sanction relief, and all the other things that go with a full-on peace treaty.
Trump said last night to Fox News that Russia would like to use some of the U.S. economic power. This is an individual who's been against the likes of Nord Stream 2 for years, Mr. Witkoff. You know that. But could you see a world when Russian energy comes back online via pipelines like Nord Stream?
Well, I can certainly see that world, but let me give you an example about the deleterious effects here and why we have to get to a solution. Russian oil today is being sold cheap to China. I'm not sure that's such a wonderful benefit of
India.
Okay, you're underscoring my point. So there are all these deleterious things that could come from this, and I think the beginning of it is a conversation. I think it's sort of unacceptable for two world leaders of the stature of a Russian president and an American president who haven't talked in 3.5 years. That's an unacceptable policy program for the president. He wants to get things done, and you get things done by getting on a telephone or meeting personally and instructing your staffs to do that, which is what he's done here.
Mr. Witkoff, it's a conversation we've had a lot on this program, which is the fact that sanctions, when it comes to Russia, didn't change Putin's motives, and they still were able to fund the war by selling a lot of this energy. It just created new markets for Russia to be willing to trade. Scott Bessent, though, the Treasury Secretary, said the other day that we will go to a 10 and bring sanctions if we have to on Russia to bring Putin to the table. Do you see President Trump getting to that point, lifting sanctions to a 10 in order to cajole Putin to the table for this ceasefire?
Look, Scott Bessent is a great Treasury Secretary. I'm not going to speak to what he had to say. I'm going to say this. I've had 2 meetings at the direction of President Trump with President Putin in the last several weeks that have collectively aggregated to almost 8 hours. Many other people, senior people in the administration, are having meetings with their colleagues and their counterparts there. The president has directed all of this. There is amazing progress being made. Yesterday, in one telephone call, we talked about an immediate ceasefire on energy infrastructure. That's game-changing. And also the Black Sea moratorium, game-changing. And the contours of how we get to a personal ceasefire, a 30-day ceasefire, game-changing. Enormous progress as compared to where we were, because we're communicating, we're talking in a collegial, constructive manner, and everybody is outcome-oriented, the outcome being the end of fighting there and the end of the killing there.
We'd all like to see that, sir. If we could just finish on Europe, something we've not discussed in the last 10 minutes or so. The Europeans, Germany and the EU are pushing to rearm. They're set to spend hundreds of billions of euros on defense. That's something that President Trump has been pushing for quite a while. Does he welcome that? Does it complicate talks in any way? Does it antagonize Russia and make this harder? How does he view that at the moment?
Look, I think the president has a policy which is that Europe should pay more for their own defense. And so I think to the extent that that's what's happening, I think that's a good thing. rearming and all the other stuff that leads to more conflagration, that leads to that undermines a peace process, I would say that that's not such a good thing. So look, we're here to get a deal in Russia and Ukraine, and we're well on the way to getting it done. And I think you're going to hear some really positive things happening as these talks continue.
Mr. Witkoff, you're a successful businessman that is now really at the height of diplomacy around the world. Europeans' strong economic ties with Russia did not prevent Putin for his full-scale invasion of Ukraine in 2021. Do you think it could prevent hostilities in the future if we were to see a ceasefire and businesses and trade were back to come into the fore?
I don't think there's any doubt. I think the point is to get everybody focused not on war, but on making their countries better, on spending the money on their people. In Ukraine, on rebuilding, on doing good things for their people. That's how you get to a better place, and that's President Trump's agenda throughout the world. And we see it being his agenda is very effective. People buy into it. I was on the phone with President Macron last night, giving him a download of what happened. And we had a really positive conversation about the outcome. So I think there's a lot of buy-in to President Trump's leadership, the way he's leading the world today, not just the United States. It's just exceptional for me to watch.
We've only got a few seconds left with you, sir, but I think that's an important comment to make. Relations with Europe, they are endorsing, are they, this approach that the president is taking? Because publicly they seem to be saying one thing. Are they endorsing this approach privately?
I'm hearing a lot of endorsement, Jonathan.
That's a very interesting development, sir. I wanted to finish on you personally, just for a moment if we can. For the people internationally that aren't aware, sir, you were widely regarded as a talented negotiator, making a fortune in real estate before taking on these responsibilities. And you seem to be having an instant impact in the role, and it started in January before Trump even got into the White House with the agreement, the ceasefire and hostage exchange between Israel and Hamas in January. Can we just finish on how transferable those skills actually are? How different is this for you to go from that world of real estate to this, life and death in Ukraine?
Well, you know, I went into the real estate business. I was a young lawyer, and I went in because I wanted to be Donald Trump, to tell you the truth. And that really is the truth, by the way. I've talked about this in the past. He was a great real estate guy, and to a large extent, I follow his example when it comes to negotiating. The president is all about clearing up misconceptions, clearing up miscommunication, figuring out how to get a good deal for all stakeholders, all constituents as a part of the deal, and then deciding beforehand what the outcome he wants is. That's how deals get structured, and they're not all that dissimilar in the political realm. And that's how we've done it in the Middle East. We follow his direction in that way, and it's highly effective.
Steve, you've been generous with your time this morning, sir, and we appreciate it here on Bloomberg Surveillance. We've got to do this again. Thank you very much for being with us. The White House Special Envoy to the Middle East there, Steve Witkoff. Gennadiy Goldberg of TD writes, market sentiment moved from euphoria to despair so fast it's given investors whiplash. While the data has become concerning, the economy is still doing okay and shows signs of moderating. Gennadiy joins us now for more. It's good to see you, sir.
Thanks for being here.
If he says exactly that today, is that hawkish?
I think so. I mean, you were looking at that 10-year rate right around 430 and saying, look how stuck it is. I think if he sounds dovish, we get right to 4%. If he sounds hawkish, we can back up pretty significantly. The market's been pricing in a lot of, Fed action, so to speak. If he comes out and says nothing, I think we go back up to 450, 460 in a hurry.
Hold on a second. On the short end or on the long end?
On the long end.
Okay, but isn't that counterintuitive? Because some people are actually growing increasingly concerned about longer-term inflation with the expectation that you've got debt issuance around the world, let alone deglobalization, et cetera. You're saying that if they sound somewhat hawkish, or at least not ragingly dovish, you could get a backup on the long end? How does that make sense?
I think the market is so much more worried about growth than inflation right now. I mean, we're all talking kind of stagflationary reactionary impulses here. I do think the Fed, if they face any sort of growth slowdown, will be pretty quick to act. But I think at this point, they're going to pour a little bit of cold water on the market's expectation that they're going to come in, effectively tomorrow and start cutting interest rates. They're still in wait-and-see mode, and that could push the long end of the curve a little bit higher.
Watch what they do, not what they say. That's what people are saying right now when you have a drinking game around uncertainty and data dependency.
Now you want to drink again.
Cheers.
There you go.
Some hot water. There is a question, though, about how much they're going to give us signaling with quantitative tightening. And I keep going back to this because ultimately we've heard about that from Scott Bessent, the Treasury Secretary. We've heard that potentially they could start to pause the allowance of their balance sheet to roll off, their lack of reinvestment, as a way to sort of ameliorate uncertainty around the debt ceiling. What do you take of that type of move if that does come?
I think they'll try to sell it as, this is completely technical, don't read into this. I think part of the issue is the markets are going to have trouble divorcing that from, interest rate policy. The Fed has always said there's two different programs. Our view is they can still wait a little bit. So our view is they don't have to actually cut QT here. They can wait until the next meeting or the meeting after. We actually think QT is going to run all the way until September before they end, with a little bit of a risk, obviously, to them ending earlier. I think that discussion has already gotten the markets a little bit, optimistic, I would say. Scott Bessent would love to have QT end today because that's $300 billion less a year that the Treasury has to fund. I would say it's more likely than not that it still stays in place for now. They've got plenty of time until that August X date. I don't think they need to rush. They can do it in June. They can do it in July. Heck, they can even do it in September.
The Treasury Secretary sat in your seat and said exactly the same thing, by the way, so he essentially alluded to that. Let's get to the forecast. Median dot shows 2 cuts. Does it show 3? 2?
I
1?
think
what does it show at the end of today?
I think the risk is that it goes to 3. I mean, we've actually got it still showing 2. I think that conversation around inflation versus growth is really what everyone's nervous about. And I wouldn't be surprised to see some of the dots actually move higher, not lower. So I think the expectation is the dots all shift universally lower because of the worry about growth. There's going to be some Fed officials who are worried about inflation, and there's a good chance the median actually stays around 2. Some shift lower, some shift higher, and we don't get a lot of movement.
The biggest risk, I think, for markets today, and we're all trying to game this out, if you get a stagflationary outcome in the revisions to the forecast and the Federal Reserve that just looks dazed and confused, that helps nobody.
Well, it helps nobody who wants a Fed put. But anyone who's looking for a Fed put, well, good luck. I feel like the bond market maybe has moved away from the idea of a Fed put a little bit. The stock market still held out hope and might be the one most susceptible to disappointment today.
Do you think he's worried about what's developing in markets, or it's just not big enough? Not yet.
I think they're watching it closely. I think, scope certainly matters. I think the timeline matters as well. I mean, if you have a 15 to 20% fall in risky assets over the course of a couple of weeks or a month, that's certainly concerning. If that happens over the couple of months or a quarter, that's something to keep an eye on. What we're really watching is the impact of this fall in equities on higher income consumers. They have been the driving force of this economy for the last couple of years. They are the reason the economy's outperformed all expectations. If they snap their pocketbooks shut, I think that's severe. I think that's what markets are trading right now. We've been taught before, don't bet against the American consumer. Not yet. I think there's a lot of nervousness, but the data is not there yet.
That would be a major change. Gennadiy, appreciate your time as always. Gennadiy Goldberg there of TD. We begin this hour with stocks steady as traders await the FOMC rate decision. Gargi Chaudhuri of BlackRock weighing in on the market volatility, writing this: there is no single smoking gun, but rather we look to a mosaic of data and sentiment indicators that have all contributed to the pullback in risk. Gargi joins us now for more. Gargi, good morning. It's good to see you.
Good morning. Great to be here.
I'm pleased you've said that, because a lot of days we get this downdraft in equities and a lot of people just say trade uncertainty, policy, volatility. And then we see names that aren't really associated with that story down aggressively, maybe much more so than the GMs of this world. What do you think explains the fuller picture?
Yeah, absolutely. So a couple of things. First of all, thank you for having me. I would characterize it as 4 different things that have been driving the markets over the last couple of weeks. So the first is, as we were discussing earlier, there has been a significant expectation of slowdown of growth for Q1 and the entirety of the year. And that's coming from, which brings me to the second point, that's coming from consumption or expectations of consumers slowing down. For the longest time, that has been the linchpin of the economy. If you're actually going to see consumers slowing down, and we've seen that in the soft data so far, we haven't necessarily seen it in some of the harder data, but if that comes about, I think that's going to be a real concern. We've heard that from corporate commentaries. We're talking about Delta and Airlines. We've seen that from Kohl's. We saw it a couple of weeks ago from Walmart and Target. That's another thing. I'll also say, of course, there's policy uncertainty. That has been there all along, but now alongside the policy uncertainty and the questions about tariffs and immigration, there's now that very real slowing down that you're seeing. Finally, I'll say that we have to give a nod a little bit to some of the valuations that we already had coming into this year. We all admitted and we knew that valuations in the US market were a little stretched. So you're seeing that pullback happen. So it's a bunch of things that are coming together.
Are we trying to create a narrative for just a momentum play? And I keep saying this because the tech trade has been the one that's gotten the most beaten up. And it comes at a time where suddenly people are questioning whether maybe their money will be better treated in other places. So you're seeing those flows rapidly shift. How much is that ultimately what's underpinning this? And it's sort of exemplified by the biggest losers.
I think that's a part of the story. There's obviously, last week on Thursday when we had those big moves and we entered into correction territory, a lot of finger pointing did happen towards what was the positioning, what were some of the hedge fund most shorted names, what were they doing, all of that. And surely that plays a role, yes. But if that was happening in vacuum without the macro picture decelerating, if that was happening in vacuum, it wouldn't have been 10%. It wouldn't have lasted. It wouldn't have been yesterday. So I think it's a combination. That was my point earlier that, Jonathan, that you read out. It's a lot of things coming together while at the same time, China and Europe are going the other way in terms of fiscal expansion. I think this is a great opportunity for investors to recognize, especially U.S. investors, to recognize the need for adding hedges and the need for diversification. To the extent you haven't had non-U.S. in your portfolio, to the extent you haven't had inflation-linked bonds in your portfolio, to the extent you haven't had anything other than tech in your portfolio, we think this is a good time to think about adding those hedges.
So let me ask you on the non-U.S. So Danny Berger earlier today shared a really interesting factoid that since the start of last year, 2024, the return on the MAX 7 is the same as the return on the DAX.
Yeah.
Going forward, what do you think that relationship looks like?
I think a lot depends. I mean, just yesterday, obviously, we finally got the approval of some of the fiscal policies that are going to take place. I think a lot of that depends on what ultimately happens and at what pace. If I had to bet for the next 10 years, I would still put my money in American innovation and AI. Some of that is just large cap quality US companies. Over the next few months or even the next year, I think Germany, which has already, as you pointed out, had an amazing run. I think there's more to that story to go, but what is your time frame? When I sit back and think about how clients are positioned, especially in the US, and I think a lot of people are recognizing the fact that they haven't had the right diversification in their portfolio, that you've had too much of large cap stocks only in the US only. You haven't had Europe. You haven't had emerging markets. And I think this is a time when investors, I mean, they should always be diversified, but certainly in the near term, if the growth is coming from elsewhere, you want to be thinking about ways to add that.
So a recent investor survey showed the biggest ever outflow from US equities and showed the biggest ever outflow from the US to the rest of the world.
Yeah.
Some people view this as signaling the end of the really nasty technicals, and that now we can look to at least neutral technicals. Do you buy that?
I mean, yes, I follow the survey. It's a good one to follow if you're a market participant. I also look at how many people fill out the survey. We do our own, and we just had a client call with over 2,000 people that answered similar poll questions. And what they talked about was actually looking for an opportunity to buy a pullback in U.S. risk. So I don't know if that survey by itself is the end-all and be-all in terms of technicals. I think this is an opportunity to educate honestly, this is our opportunity to go out and tell investors that there are other options. There used to be just one. There was no alternative. We all know that acronym. Now there are other options. Those options come in gold as diversifiers, in shorter dated tips. It comes in the minimum volatility parts of the U.S. market. And yes, it comes in Europe and non-U.S.
Price is doing the educating right now, isn't it, over the last few months?
I love that idea that essentially if you want to talk about why Europe might make sense, now is your moment to go talk to people.
It's easier to talk about now. We had people coming on the program for so many years saying the same thing and nothing happened.
Exactly. So now they can come out and say, look, there is hope there. I do wonder at what point we get a structural shift, and just to Mohammed's point earlier about this idea that are we looking at a long-term shift in flows and potential, and how do you price that in? And it seems like investors are not really suggesting that just yet.
Gargi, appreciate your time. It's always good to see you. Thanks for dropping by. Gargi Chaudhuri there of BlackRock. Let's do a proper introduction. David Rubenstein at the Carlyle Group joins us now for more. David, good morning. Good to see you.
My pleasure to be here. Thank you for having me.
You've caught up with some fantastic individuals over the last few weeks, including the former Treasury Secretary, Steve Mnuchin. But I think we want your thoughts, your individual view on where we are in this economy and where you think things are heading.
Well, obviously, the economy depends on certainty, and there's some lack of certainty right now about what's going to happen on taxes and tariffs. So when there's greater certainty, I think we can better predict where the economy is going to go. Mohammed knows that so well. So in my view, there's some uncertainty right now. I had a chance recently at an event over the weekend to interview the chairman of the House Ways and Means Committee. And, you know, he's pretty bullish on his ability to get the tax cuts through the president wants, but the market wants to see if it's actually going to happen, and then what's going to happen in the Senate. And then we have to see whether the tariffs are actually going to go through or at what level. So there's some uncertainty. But right now, the market is not as disappointed in where things are as I would have thought. The market's not collapsing as some people thought it might. So, you know, maybe some of the things that President Trump is doing are having some impact on the market favorably.
How much is the Fed part of this discussion, with people expecting them to step in and rescue the economy should grow slow enough versus prioritize inflation?
Well, when the Fed, I think the Fed's view is the Fed doesn't surprise people. Under Jay Powell, the Fed pretty much tells you what it's going to do and then explains what it's done after he does it. And today, there's been no signals out of the Fed that there's going to be a rate cut that I can see. So I think it's unlikely you're going to get a Fed rate cut today. And therefore, I think the market would be shocked if it were. We'd be very happy if it did. But I don't think it will happen today.
David, where are we on two characterizations about private equity? One is a ton of money on the sideline waiting to come in, and two, distributions back are still very, very slow.
Well, for the last couple of years, there haven't been as many exit opportunities as people wanted. And as a result, a lot of the private equity firms are ready to sell things. They were hoping at the beginning of this year, as the new administration came in, that there'd be looser regulatory controls, IPOs would be better, and so forth. That hasn't yet happened. It may happen, hasn't yet happened. There is a lot of money on the sidelines for sure, and I do think that some of the deals that have been talked about probably will get done, but I think the market is waiting to see whether a lot of the large deals are going to be approved by the FTC or the Justice Department, and it isn't clear that they will get approved. For example, the Wiz deal that was, I guess, announced or maybe going to be announced, it's not clear that'll get approved. It didn't get approved before under Biden, or at least the temporary indications were that it wouldn't have been approved. Today, I don't know whether that deal will be approved or not. That's a big deal. If the market were to market would be very happy if that deal would get approved, my guess would be.
So you mentioned the importance of trying to resolve the uncertainty, and that's the upside. What's the downside? What's the thing that keeps you up at night?
Well, clearly, markets want to know what the rules of the game are. Most business people can adapt. Just tell us what the rules are and we'll move one way or the other. Right now, there's some uncertainty as to whether President Trump can get through the tax cuts he wants at the level he wants. Can they get through the Senate? Will the Doge people get all the spending cuts they want? Nobody really knows. Will the judges stop some of that? There's some uncertainty. Until there's more certainty, I don't think anybody can know for certain whether we're really going to have the economic boom that we would like to have.
David, you have a relationship with the president. You've spoken to him. Do you believe there's something like the Trump put still in play?
Well, I think President Trump came into office with big expectations from the market that he would do a lot of things that President Biden didn't do. So far, President Trump has tried to do a lot of these things. They haven't yet come into reality, but they may. I just don't know yet. I think he's fairly bullish about his ability to get these things through Congress, but obviously he's frustrated from time to time about what the judges are doing.
Last question. Comes from a Bloomberg subscriber. Does Mr. Rubenstein think the Orioles will win the American League East? That seems to be the only thing people care about right now. What's your answer to that?
We certainly deserve, because we have a great owner. And
we agree with that part.
Yes, if the ownership is the most important criteria, we should. And we have a good team. And amazingly, they can project how many games we're going to win in advance of the season. And they're pretty accurate. But I won't say how many they project.
I think Mike is part of the ownership group too, so I've got to agree with that as well. So it's always great to catch up with you. Appreciate your time.
Thank you.
Thank you very much. David Rubenstein there of the Carlyle Group. Thank you. And do not miss David's conversation with former Treasury Secretary Steve Mnuchin tonight on peer-to-peer conversations right here on Bloomberg.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.